What's up, traders? Welcome back to Rise Trade. Today is July 20th, 2026, and we are taking a closer look at silver against the US dollar on the daily time frame. Silver is currently trading near the $57 area after a short-term rebound. But the most important question is not whether price can move slightly higher today. The real question is whether this rebound changes the broader bearish structure. And based on the daily chart, the answer is not yet. We highlighted this large corrective triangle several weeks ago, while price was still developing the final section of the pattern. The structure consisted of 5 internal swings marked as waves, A, B, C, D, and E. Wave E completed near the $74 region, underneath the descending resistance line. That area became especially important because price failed to break the series of lower highs. Instead of generating a bullish continuation, silver rejected the upper boundary and began moving lower. Since then, price has already declined from approximately $74 toward the current $56 to $57 region. This is why big picture market analysis matters. A valid daily structure should not be changed every time the market produces one bullish candle or a temporary intraday rebound. Its purpose is to identify the dominant direction over several days, several weeks, and sometimes an entire month. Now let's examine the Elliott Wave structure. The previous major bullish impulse appears to have completed near the February high. Following that peak, the market entered a complex corrective phase. The first major section is marked as Wave W. The triangle that developed between February and June is marked as Wave X. After the completion of Wave E inside that triangle, the next bearish section, Wave Y, appears to have started. This interpretation explains why the breakdown below the lower triangle boundary was technically significant. The market did not simply move below one horizontal support level. It potentially confirmed the transition from a consolidation phase into the next directional bearish leg. At the moment, silver continues to form lower highs and lower lows on the daily chart. The latest rebound has not yet recovered the broken structure, and buyers have not produced a convincing bullish reversal. As long as price remains below the major broken triangle and fails to reclaim the previous structural highs, the broader bearish scenario remains active. The next major technical objective is located around the $44 to $46 zone. This target is based on the projected completion of Wave Y and the lower area highlighted on the daily chart. However, this does not mean silver must move directly toward $45 without any rebounds. Markets rarely move in a straight line. We may see temporary rallies, short squeezes, and periods of consolidation during the decline. Those movements are normal and should not automatically be interpreted as a complete trend reversal. For the bearish scenario to remain credible, sellers need to maintain control of the daily market structure. A renewed rejection from resistance, followed by a break below the latest swing low, would provide stronger confirmation that the next bearish leg is continuing. The alternative scenario must also be respected. If silver begins recovering the broken support area, forms a clear higher low, and then breaks above the descending sequence of lower highs, the current bearish wave count would need to be reviewed. That is why professional analysis is based on confirmation rather than blind prediction. Right now, the broader structure still favors another decline, but entering a position without confirmation would expose traders to unnecessary risk during short-term volatility. The key lesson from this chart is simple. Big picture analysis does not need to change every day. When the structure is correctly identified, it can provide direction for the entire week or even the entire month. Silver has already declined from the Wave E region near $74 toward $57. The triangle breakdown remains active, and unless buyers produce a genuine structural reversal, the $44 to $46 zone remains the next major bearish objective in this Elliott Wave scenario. Trade the structure, wait for confirmation, and never allow one temporary price movement to override the broader market picture. Subscribe to Rise Trade for daily technical analysis covering gold, silver, forex, crypto, and major global markets. You can also join our Telegram community and visit our website through the links in the description. Thanks for watching, and I'll see you in the next market analysis.